Joining me now in a Fox Business exclusive is Roundhill Investments CEO Dave Mazza, a big ETF company. Dave, GameStop moving on that repost from the White House. Okay, yeah, a 1% jump, but back in 2021, at the height of the meme stock hysteria, that kind of mention would have sent the stock soaring. And yet you're still going in on meme stocks in one of your ETFs called Meme. Why?
Well, it's because retail investors are actually now a structural force in equity markets. Before COVID, retail made up about 5 to 10% of daily trading volume. Now it's north of 20% on up days, on down days, on flat days. So the retail investor and their ability to access stocks with commission-free trading, the engagement in online communities has really changed the way investing works. And the meme stock ETF, ticker Meme, is really intended to actually replicate that retail momentum. And so GameStop, of course, the OG of meme stocks, the original meme stock in many ways, can still, as we saw today, can still kind of play a role in meme portfolios, but it's actually a very different environment for stocks and meme stocks in 2021 versus 2025.
I have to say, and I didn't want to give, when I came in this morning, I didn't want to give too much attention to certain aspects of what we've seen lately. I'm thinking of Beyond Meat, because Beyond Meat suddenly became a huge retail stock excitement generator, certainly, and it's spiked dramatically over the past couple of days. At one point up, I don't know, 1,000% or something, and then it has lost those gains, which is disappointing, certainly. Right now, today, it's down another 13%. But yet you believe that this is an opportunity for people to at least participate in something that's very real. Sometimes, depending on the moment, retail investors band together and they can move a stock like no other.
No, you're absolutely right. So while these stocks are inherently volatile, they're inherently risky.
Right.
The meme ETF is not intended to be the entirety of someone's portfolio. But what it's really intended to do is, to your point, capture the fact that retail can move markets in a way that they never could before. And so when we look at actually the meme stock holdings today, you see Beyond Meat in the portfolio with a significant weight because its trading volume has increased, its implied volatility has increased, coupled with the fact that its online mentions and focus by retail has skyrocketed. But then if you peel back the onion, there's also some other themes in there that retail has really been interested in this year: quantum computing, the rare earth metals, sort of the advanced energy plays, plus, of course, the connectivity of AI and AI adjacent names. So the meme ETF portfolio is going to move as the retail market moves, and there's going to be exposure to companies that have sort of maybe short interest driven catalysts, like Beyond Meat, like Krispy Kreme, coupled with stocks that really are just of interest to retail investors, like a Rigetti Computing.
Well, let's talk about what's of interest to investors who want to see gains, and that is a different thematic ETF, Nerd. Nerd has all of the video game companies in there, and I find this really impressive. It has had one of the best performances for you guys year to date. Tell me what's in it and why you think that is.
Yeah, it's interesting. So Nerd is the video games ETF. And to me, it's actually one of the most under the radar themes that we see in the market, certainly in our lineup. It's actually one of our smaller ETFs, but its gains have been really impressive this year. And why do we believe that to be the case? It's because we know that there was a lot of focus on video games again in the pandemic. When people were home, they didn't have much to do other than play games and chat over Zoom with friends and family. And there was some consolidation in the space. And since then, we have seen sort of video games begin to come back into play as the consumer has evolved. New titles have come to market. The Nintendo Switch has been a game changer. We know Grand Theft Auto, the reboot there is coming. And that's actually just like Grand Theft Auto did when it originally came to bear. Yeah. It's going to be revolutionary for the way that investors can play video games.
So you've got EA, Electronic Arts, Take-Two, Interactive. I'm just wondering why Microsoft isn't in there, because they bought Activision Blizzard. They are not the sort of pure play console maker anymore. They've got a lot of titles under their wings.
That's true. So Microsoft certainly has involvement with that Activision purchase that they made a few years ago. But the way we think about the Nerd ETF video games is really trying to access some of those pure play exposures. And so Microsoft has such high revenue coming from other places. We didn't think it sort of makes sense for investors who are looking just to kind of tap into that potential. Certainly, Microsoft has had a really impressive run, even outside of the Activision news.
And I do have to bring up your other ETF, Chat, because this is an AI chatbot ETF that has outperformed even Nerd, which is very interesting and not surprising considering all that's been happening, especially today. You've got AMD, which is one of the top holdings in here, hitting a record high. What do you think happens in the future, in the near future? Are you seeing more and more people coming to, cleaving to this particular ETF?
Yeah, so our chat ETF actually just crossed over $1 billion in assets recently as investors have come to see that generative AI is not just sort of a short-term trade. It actually has the potential to be really transformative to the way the business world works, consumers connect with businesses, and so forth. And so what we're seeing is the first wave of AI growth was really focused on picks and shovels, NVIDIA, AMD, et cetera, moved into the hyperscalers. But now we're seeing smaller players and even software-type names get involved with generative AI and begin to have a path toward material revenue. Of course, it's got a big week for the AI trade with the big 5 tech names reporting, but we think there's a lot of momentum still left there.
Well, September 25th or so, you had $7 billion in assets under management there in the ETFs. 15 days later, you jumped to $8 billion, and now you're already at $9.6 billion. You got a business going there. Congratulations.
Thank you.
You bet. Dave Mazza of Roundhill.